Hello, everyone. Today on the final bar, my guest is Bruce Powers. Bruce is going to talk to us about the airline stocks, which have been key for a lot of people, kind of came out of nowhere and then retreated back very quickly. What's next for that key group a lot of people have been paying attention to? Bruce is going to help us make sense of that. The S&P is still in back and fill mode, sort of making sense of things, digesting the previous gains. The question now on a lot of investors' minds, which way do we break next? We'll try to answer that question together today. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. This is your host, Dave Keller. I'm the Chief Market Strategist at StockCharts.com here in Redmond, Washington. Thanks for joining us every weekday after the close to make sense of these markets, think about the technical, behavioral implications of the data we're gathering during the day, and then most importantly, connect the short term of what we're seeing today with the long term. As we talked yesterday in a segment called The Mindful Investor, it's so important to be intentional about how you're looking at data, how you're consuming information, whether it's financial media, charts, short-term versus long-term charts, your portfolio versus broad market indicators. And I hope through the course of this show, you get a sense of some of the ways that you can maybe upgrade your routines of breaking down the markets. This is a time when the markets have sort of stabilized. We've had a pretty volatile couple of weeks, but it's settled into a pretty decent range. And I think most stocks are sort of giving that either or illustration, right? Could break higher, could break lower. In our segment, Fishing for Alpha, though, we're going to focus on stocks that have actually already broken to the upside by screening using Bollinger Band. So it should be an interesting list of names to think about together. We have some great guests on the show over the course of time to help us make sense of things. Bruce Powers today, I'm really excited to have him on the show for the first time today. Next week, on Monday, for Behind the Charts, we have Tony Hansen. I met Tony at one of the money shows recently. I'd followed Tony's work, but it was really cool to sit down with her and hear about how she thinks about the market. She talks a lot about patterns and how you interpret them, and has a very simplistic but very powerful way of understanding price patterns that I think you'd really appreciate. That's on Monday, Behind the Charts. Then coming up on the final bar next week, we have Sam Burns from Mill Street Research on Tuesday. On Wednesday, Chris Brecher from Brecher Trading. And then on Thursday, Joe Duarte from Joe Duarte in the moneyoptions.com. Joe's one of our most recent additions to the StockCharts contributor family. So excited to have him on the show for the first time. Also, as a reminder, the week of July 13th, mark that down, while doing a special week on StockCharts TV called Charting the Second Half, where we focus on a mid-year outlook. A second half of the year outlook, taking stock of the situation 6 months in and think about the remainder of the year. So you're not going to want to miss a really special event on StockCharts TV. Let's get to our market recap. So as I've mentioned, today's trading was choppy, sideways. The range was relatively muted. We only had about a 15, 20-point range in the S&P, which is pretty low relative to the average day that we've seen recently. The S&P finished almost identical to the close yesterday, although fluctuated quite a bit up and down. Interesting to see the first 30 minutes and the last 30 minutes both stronger rather than weaker. So seeing accumulation in both those key times of the day, but overall not real momentum. This was not any sort of follow through. This is really, I call these a digestion day, sort of a take a breather. We've settled into an equilibrium. There's no real clear path from today's data, in my opinion. The information we can get out of it is this, though. Technology certainly on the stronger side. Tech was the third strongest sector, up about 50 basis points today, 0.5%. The NASDAQ 100 up 0.3% to close back above 10,000. The strength in technology has certainly been a consistent story. And when you look at the chart of the XLK, that was one of our 3-and-3 charts yesterday, the relative strength just continues to impress. So people are treating that as offense when the market does well. They're also treating tech as defense when they're getting nervous. And I think when people are floating to a particular sector in either offense or defense, tends to be something I want to be in or be following very closely. And that's where tech is at the moment. Mid caps and small caps today actually down about 1/3% each. So S&P flat, tech on the upside, small and mid cap on the downside. So a bit of a mixed bag of sorts. Looking very quickly at some of the other asset classes, bonds actually stronger today. So the TLT opened up and then just continued to chip away higher, up 1%. 10-year yields back below 0.7%, 70 basis points. The commodity complex, essentially not terribly exciting, although oil prices were up over 2%. This puts energy to be the #1 sector today out of the 11 S&P sectors, with the XLE up over 1%, while most things are sort of flat to mixed. Commodities as a whole up 0.5%. Gold down just a little bit, not too big. A lot of that came right out of the open, and then since then, gold spent most of the day sort of chipping away and recovering some of those early losses. You know, the chart of the S&P right now, I think what we've talked about the last couple of days still sort of holds true here. You had the big run up into the high the first week in June. You then had the sell-off last week, the second week in June, and Thursday, that big gap lower, that huge distribution day. We had two lower lows right after that. And since then, we're pretty much at the midpoint of that range. We've settled into this to this range of sorts from around 29.50 on the lower end, around 32.50 on the upper end. You know, we can spend plenty of time in this range, but at some point, one of these is gonna take control. We're gonna break higher, break lower. You know, I talked about screening for Bollinger Bands. The reason why that came to mind was, you know, talking with John Bollinger at times about the narrowing of volatility. When you have a volatile period and then a less volatile period, which is sort of where we're going right now, the Bollinger Bands will actually narrow. They'll come together because the volatility has lessened. And usually that is the precursor to a big significant break one way or the other. So one of his ways of using Bollinger Bands is look for the narrowing of the bands and then see which way the momentum breaks. I feel like that's kind of where we're at right now, with the market settling into this sort of new equilibrium range. Maybe the last one was back here in May. We've now established a new sort of price range where buyers and sellers are sort of in agreement. And one of these is going to take control. Either buyers become more aggressive, sellers become more aggressive, push the price out of that range into new territory. So I think the direction of momentum from here could be really key. You know, I mentioned bonds being stronger today. I think it's worth just noting the chart of the TLT. You know, if you take a trend line from the recent highs, overall, we've seen this pattern of lower highs and lower lows. The TLT has been in a bit of a downtrend, but really hasn't broken down that significantly, and actually has put in a higher low from the low that we saw last week. The signal that I think we're in the all clear back to a bullish indication on bonds is if we break above trendline resistance, break above the 50-day moving average, that would put it above around 165 or so. That would indicate sort of a continued pattern of now higher highs, higher lows, an uptrend for the TLT, and that's coming off of this distribution that we've seen really in the last 6 weeks or so. So interesting to see it gap higher today. I'd love to see some follow through to build a more constructive pattern on bonds in particular. In terms of other sector indications, and then we'll look at some other thematic moves today. The XLE, as I mentioned, up the most. Consumer staples, #2, which is not really traditional offense. That's a group that we've looked at a little bit recently because some of those charts have broken down, some of them holding up at an area of support where you'd question whether they're going to stabilize or not. So today actually outperforming the S&P. Up about 0.5%. Technology also up about 0.5% as well. On the downside, we have REITs down 1.25%, followed by consumer discretionary, followed by industrials, healthcare. When we think about healthcare, I think it was interesting to note Biogen, one of the biggest losers in the scooter rankings today. So this is, again, a shift in trend, essentially. So it's a percentile ranking, and stocks that have lost the most in that value essentially means that they've underperformed the rest of the equity, the rest of the large cap equity universe. You know, biotechs are a really interesting group. This is a group that as a whole has done very well at times, other times has struggled. The chart of the IBB, which is sort of the broad biotech index, holding up actually very nicely. And if you look at this, it's not a bad play, having pulled back to an ascending 50-day moving average, kind of rebounding upside. The question now is it's just testing a huge resistance area, but overall, it's broken above its peak from earlier in the year, now retesting support at the 50-day and now rallying higher. It's actually not a bad group. Biogen is not on that train, though, and you can see this is sort of an outlier. Now oversold. You can see the relative strength has gotten pretty bad. It's broken below its 200-day moving average. Today was actually gapping below the March low. So biotech ex Biogen looking just fine, it seems like, but worth noting that that there's some divergence or some dispersion of sorts within the group there. Ross Stores is another one. This is one of the biggest retreats in scooter rankings. You know, Ross Stores is at an interesting junction. We talked earlier, I think it was either Friday or Monday. We talked about 3 stocks that are, I'll give you a good market tell. And a couple of them looked similar to the chart of Ross Stores, sort of caught between resistance and the 200-day, caught beneath between that and support, between price support and the 50-day moving average. Again, it's sort of in this sideways sort of congestion range. Do we recover and break above the 200-day? Do we continue lower and make a new lower low? And I think it's really telling right now that Ross Stores with an RSI just above 40, which in a bullish phase, that tends to be support. So we're right at that point, whether this is holding support or we break down. I think that 87.50 level is a really important one to watch on Ross Stores in particular. In terms of groups, I just wanted to point out a couple other things. E&P stocks, which are a big group within energy, the number one sector industry group today. Other groups of note on here are hotels, which is in consumer discretionary, software within technology. That's a pretty significant group. That's Microsoft's group. And then also tobacco stocks, which have been, some of the more beaten down names, all of a sudden consolidating, starting to come off a little bit off of the lows. So it might be an interesting group that you may have mentally written off within consumer staples to potentially pay attention to. That's our market recap for today. Again, sort of a stabilization day, a digestion day is what I usually call this. We're sort of setting an equilibrium, and I think now is the time to be reviewing key charts in your portfolio and your watch list and identifying lines in the sand for breakouts and breakdowns, at which point you should be compelled to take some sort of action. Let's take a quick commercial break. Back with my guest, Bruce Powers. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller at StockCharts.com. As a reminder, we love the interactive nature of the show, and we've heard from so many of you asking questions about charts, about technical analysis, about decision-making, behaviors, investing in general. We love to hear from you. Any question is fair game. We'll do our best to get to as many of those questions as we can. 2 ways to get a hold of us. Shoot us an email, thefinalbar@StockCharts.com. or hit us up on Twitter. Just tag us in a comment at FinalBarSCTV. We'll answer one of your questions, hopefully in our mailbag segment, which will be tomorrow. Want to welcome on my guest, Bruce Powers. Bruce is a fellow CMT. I've known Bruce for a number of years and first connected with him as he was relocating from many years spent in the Middle East, rotating back to North America. And Bruce, it's such a pleasure to have you on the show.
Thanks so much, David. Appreciate it. It's good to be here.
So airlines, I'm so glad that you sent a chart of jets, one of the airline ETFs, because that group is one that I think so many people were afraid of because they got destroyed when the market sold off in March for obvious reasons. But since then, all of a sudden, it exploded back in a huge move, end of May, beginning of June. What is your toolkit telling us about the space, and how should we be thinking about it right now?
Yeah, absolutely. So, I was looking for, I was also afraid of the airline, so I missed that first rally, but I've been watching them. So they calm down and they create some type of pattern that I recognize and some price behavior that I may have seen before. So off that low, on the chart, you see at the bottom right low, Jets rallied 96%. So that's really, if you look at the overall chart now, that's really your first leg up, possibly in a measured move or an ABCD pattern that could complete at some point. So that's kind of what I'm looking at. And it's backed up by the fact that we have a double bottom breakout. We see the two bottoms noted there, and then the high breakout a couple weeks ago. And then you have an accelerated move. You have an increase in volume. You have a retracement to 50% of the prior move, which and many times is going to be the minimum expected move. And then you have another retracement now into 50% once again. Also, very importantly, we have the 20-period SMA crossing above the 50-period SMA right after that downtrend line was broken, another bullish signal. So I think there might be another leg up on this ETF. And so when I look at this, I look at two scenarios. One, I have a bias towards the upside given the analysis I just looked at. And then, but I'm also going to look at the alternative, and we'll look at the first one, for the first option first. So if we do take off from this retracement low, and we don't know if this low is going to hold yet, but it has a chance of holding, then there's two zones up higher, I think, that we could get to based on taking the measurement of the first leg up and adding that distance onto the C leg. So we're looking for a match between the AB leg and the CD leg. And if that happens, then we can get up to the 2740 zone approximately. Up there. And that's the higher target. And that's also where the 78.6% fib is. So we have the combination of the measured move ABCD pattern matching with the 78% retracement. And then just below that, we have another zone where we have the 200 period moving average, which right now is about 2488, with the 61.8% Fibonacci retracement at 2423. So that creates two potential target zones. Of course, that scenario is wrong if we break below C. However, that doesn't mean it's completely gone forever, because we have a couple support. We have another support zone that I would watch. If we do break C before we go higher, we can watch the retracement down to the 61.8%, around $15.41, combined with the 50 period SMA, which is currently at 1515, I'm sorry. So 1515 to 1540 would be another zone down there. And then we would be looking for a bounce off that and a continuation higher possibly at that point. Notice also on the retracement how volume has declined. So we don't have selling kicking in. And so I think there's a good chance we're going to get another push here and maybe another nice run.
No, it's a great chart, Bruce. And for those that aren't familiar, when you say an ABCD pattern, I would describe it as, A to B is sort of that big initial move out of the lows, B to C is this retracement, and then C to D is basically extending that first leg and sort of projecting a similar move higher. Is that fair? How would you describe it?
Yes, absolutely. So we're looking for some symmetry to show up in the market.
Right.
So where we have a match between a previous swing. And so this happens relatively frequently. And sometimes it'll go more than 100%, but if it goes to 100%, then it would reach the D leg. So usually it's pretty common to have at least a second leg up or second leg down once a swing starts. So the swing with a reversal of that downtrend up to January high, we've only had one leg up. So the idea would be we'll have another leg up. The probability that there is some symmetry in that second leg up relative to the first leg is pretty decent.
And it's worth noting, I think, for people that aren't super familiar with the Jets ETF in particular, you and I were talking before we started, a lot of the individual airlines kind of in a similar pattern, right? So we're looking at American Airlines here, but Delta and others, it seems like this pattern's pretty prevalent with the airlines overall, right?
Yeah, you look at most of the major airline stocks, they have a similar pattern. There's also pretty good volume now in this ETF. There's about 23 million 50-day average volume. So, which is decent.
That's not bad. Bruce, what I love about the chart that you showed us and talked through is clearly defined levels, which I think for a lot of people, they struggle with, just managing the risk and reward. And I think what I love about that is identifying some key levels at which you need to revisit the thesis, right?
Exactly. So, I have no idea where it's going to go and what's going to happen, but I've created a couple different scenarios, a couple on the upside and then one on the downside. And then I'll see how the market behaves and then watch price action to let it tell me what's happening relative to those scenarios. So those targets would be where you're either ratcheting up stops significantly to protect your profits, or you're just taking profits at that level. At the same time, you want to be ratcheting up stops and do some type of trailing stop so you have proper risk management as well.
Bruce, this is great to have you on the show. Thanks for talking us through your process a little bit. Hope you and everyone with you stay safe, all right?
Thanks so much. I appreciate it. Good to be here.
It was Bruce Powers joining us. Bruce is from the Itero Group based in the New York area. And again, I've gotten to know Bruce for a number of years. I first met him when he was based in Dubai, I want to say. And we talked a lot about his experience with seeing the markets, the financial markets evolve in an incredible period of growth in that region of the world, and it's been fun to keep in touch with Bruce and get a sense of where he's looking. I love his point that the question I asked him at the end about clearly defining levels, and I always talk about a line in the sand. At what point you're going to revisit something. I think there's a lot to be gained from that if you're not incorporating something like that in your process already. Our next segment is called Fishing for Alpha, and in an environment like this where it feels like stocks are in sort of wait and see mode, which is certainly how I would tend to describe it. Sort of even though the overall trend has been positive in the last couple of weeks, we've had a bit of a distribution, a bit of a gap down, and the question is what's next. And I think for a lot of stocks, they're sort of trapped in that holding pattern of sorts, similar to the overall market. But it's worth noting that even in this sort of sideways, choppy environment, there are plenty of stocks breaking out. There are plenty of stocks breaking down. And I think a time like this is when using screening tools effectively can be really, really valuable. If you're not familiar with the scanning engine on StockCharts, you should do yourself a favor and spend some time with it. My boss, Chip Anderson, the founder of StockCharts, has recorded some great videos explaining how to use the scan engine, some of his tips and tricks for doing so. So check out some of his videos on our YouTube channel if you've not done so already. But what I'm going to do is show you one of the scans that I run in particular, and this is using Bollinger Bands. So I'm going to run the scan real quick, and then I'll explain to you what I did. So, Bollinger Bands, if you're not familiar with it, let me bring them up here very quickly. So we'll overlay Bollinger Bands. Might be a little busy, but hopefully you can see them. Right. We'll take off some moving averages here. Okay, so now we just have Bollinger Bands at the top. So if you're not familiar with John Bollinger's contribution to volatility analysis, this is what it is. Essentially, you have a moving average in the middle, and here we're using a 20-day moving average. That's the dotted blue line here in the middle. And then his idea was a lot of people were using percentage bands, which was saying, all right, 3% above and below that moving average, that's sort of the trading range. But those are fairly static, right? So they're not going to adjust based on the volatility. What Bollinger's bands do are they basically adjust on the volatility. So it's 2 standard deviations above and below that moving average. So the more volatile the stock, the more it gets away from the moving average, the more that the bands are going to expand. And in periods of lower volatility, the bands will actually come in a little bit and will narrow. And the idea is you're looking at how these bands fluctuate and where the price is relative to some of those key bands. What's interesting is in a sideways market, you will see that the price tends to find support at the lower band and find resistance at the upper band. But in breakouts, you'll see it actually breaks out through the bands. It'll break down through the lower band or break up through the upper band. And that usually means a regime change of sorts, that the picture is changing, that there's a new paradigm, there's a new supply-demand picture. And so a lot of times what I like to do is screen for stocks sort of in this environment that have just closed above their upper band as indications of stocks that have just rotated higher. I ran that screen, I think this is on the S&P 500. It might be a little broader. Yeah, this is U.S. stocks essentially with a market cap above 10 billion, right? So sort of mid-cap plus sort of names, large cap essentially. I came up with 9 stocks that fit this when I ran the screen earlier today, and I'm sorting this by sector. So you can see Interactive Corp. Within consumer, you only have 2 stocks, Match Group, Church & Dwight, 1 industrial stock, and this is CoStar Group, one that might not be familiar to many of you, and then the other 5, all in technology, which I'm not incredibly surprised at because that's sort of the way things have gone here recently. So what I'm going to do is store these in a new chart list. I'm going to preserve the order. We'll hit OK. Now I've got a list of these stocks. I'm going to go to 10 per page so we can go through the charts very quickly. And what you're going to find a pretty consistent theme here. These are stocks that are essentially at or near pretty significant highs because the stocks that are breaking out right now have sort of been in a period of accumulation to get to this point. So Interactive Corp, the only stock within communication services, has had an incredible relative run since the March low. Look at how the relative performance has been consistently positive and just has been continuing to outperform during this entire stretch. While the market has pulled back, while the S&P has pulled back a little bit, you can see that this is actually accelerated to the upside and broken above its January high. It's overbought right now, which overall just means it's up a lot. That's good, but potentially a bit of a pullback in store. What's interesting to see is if it gets with an RSI above 80, that usually means it's extremely overbought, which in my book is a good overbought. That means the momentum is so strong it's going to pull back potentially a little bit, but overall the trend remains in a pretty positive place. So even though it's been up a decent amount, I think it's worth consideration only because the relative strength has been strong. It's been up on days where the market has not been up in a meaningful way, and that I sort of like. Chart number 2 is within consumer discretionary. This is Match Group, MTCH. This is another one that's going through a huge base breakout. This is the last year. You can see it actually peaked out last August, retested that level in January, came off, now has completed the V bottom, retested the high, and now breaking to a higher high. This is sort of that cup and handle like pattern we talked about in previous charts as well. The relative strength breaking to a new 10-month high today, continuing to rotate higher. The relative strength for the last 2 months has been 3 months has been pretty strong. Right now it's overbought, which means potentially you'd expect a bit of a pullback, but you can see that that's happened a couple times during this rally, and those have been a pretty buyable pullback. So I think both of those names, I think, right for a pullback, but could be something that would be worth considering. Church & Dwight is the only consumer staples chart to fit this criteria. Again, a breaking above the upper band, which I'm not showing you here, but I showed you the chart before just to give you a sense of what this is looking at. Again, this is something that's breaking above its swing high from February, finally making a new high after completing the V bottom. Relative strength has not been as significant because it didn't sell off a ton going into the lows. You see the relative strength was exceptional going into the lows because it held up so well. Since then, it's retraced those levels, but a lot of those other sectors had gotten really bombed out and really had a lot more to retrace to get back to its previous highs, but not overextended. Breaking to new highs overall is a pretty compelling idea. Within the industrial space, we have CoStar Group, CSGP, again breaking to a new swing high, not overbought yet, and you can see the relative strength just starting to improve in the last couple of weeks. The rest of these charts are all within technology, so I'll go very quickly. Adobe breaking to new relative highs this week. Salesforce.com CRM, which is approaching a pretty significant resistance level there from February. Datadog DDOG has actually been on an incredible run. This one feels a little extended to me and potentially making a big bearish divergence with a lower RSI and a higher price. Roku just breaking above its 200-day moving average. And Shopify, after a bit of a pullback after a bearish engulfing pattern last month, reclaiming those previous highs, testing a new 12-month relative high. So those are 9 stocks that bubbled up on my screen, looking for stocks breaking above their upper Bollinger Bands. That's actually a really easy screen to set up using our scanning engine. Hopefully it gives you some ideas of some of the charts that are actually emerging in a period of strength during a period of struggle for the broader market environment. We need to close out the show, folks, and go right to the 3 and 3, which I'm told in my ear is 3 and 1, and we will get through it. Chart number 1, the TLT, the long bond ETF. We talked about this earlier during our market recap, and I think this trend line is a really good one to watch. If and when the TLT can break above the trend line, above its previous swing high, above the 50-day, that would complete this rotation from distribution to accumulation and would suggest to me that bonds are in a period of starting to do a little better than they have up until now. Chart number 2 is looking at the cumulative advanced decline lines. We didn't talk about this earlier, but I've been looking at this uptrend since the March lows, higher highs, higher lows. We're potentially maybe establishing a bit of a lower high here on some of these breadth readings. Again, this is not done yet, so we'll have to see how the next couple days play out. But again, if we start to get a lower peak and then a lower valley, we break below that previous swing low, that would be an indication that breadth is starting to rotate lower. So it's not happening yet, but it's on my radar for sure. And then the final chart, we talk about sentiment occasionally on the show, and I think it's worth noting there's been a pretty significant shift in the AAII ratings. This is the survey of individual investors. Last week was almost flat, still more bears than bulls, which has been the case since mid-February, but we almost got back to the zero level where there was an even number of bulls and bears. That has changed this week, and I think last Thursday's sell-off certainly made a number of individual investors anxious for sure. And this is now rotated back down to 24%, 23% favoring bears over bulls, essentially meaning people are a lot more cautious this week than they were last week. Folks, that's our show for today. I want to thank my guest, Bruce Powers from the Itero Group, for joining us from the New York area today, sharing his chart of the airline sector. As a reminder, shoot us an email anytime, thefinalbar@stockcharts.com. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.